Hello everyone. My name is Martin Abraham, and I'm gonna present a small segment performance evaluation on Berkshire Hathaway, which is my target company. Okay, so I hope all of you might have known about this firm. Berkshire Hathaway is one of the world's largest asset managing firm, which is led by Warren Buffett. And this name Warren Buffett is so popular, and that everyone would definitely know about him. So this is the firm which is led by Warren Buffett, and it's called Berkshire Hathaway. So I'll start on with my project. So so while talking about Berkshire Hathaway, it was founded out in 1839 as a textile manufacturer, and it got transitioned into a major conglomerate starting in 1965 under the management of chairman and CEO, that is Mr. Warren Buffett, and vice chairman Charlie Munger. Okay, so I think this Charlie Munger is also well known for being the manager of Berkshire Hathaway. I mean, the vice chairman of Berkshire Hathaway. And Buffett personally owns about like 38.4% of the Class A voting shares of Berkshire Hathaway, which is around 15.1% of the overall economic interest in the company. Then Berkshire Hathaway is actually a conglomerate, which not only includes the insurance sector, which means the investment section. Like they also have a rail transportation and an energy and some energy generation division, and some distribution, manufacturing, and retailing, and all these are included in the conglomerate business of Berkshire Hathaway. And the main business consists of consistently conveyed by CEO and Chairman Mr. Warren Buffett to the businesses within the company. The main message is this, that the firm should never lose their reputation, and the second one is that they should run your own business as if it's your family's only asset for the next century. And the third one is that the integrity comes first. So these are the three main statements that Mr. Buffett used to say, and this is kind of the vision that Buffett provides to his employees. So so we know that how legitimate they conduct their business. Okay. And now we are moving on to some of the executives of Berkshire Hathaway. And the first and foremost is the Warren Buffett, who is the chairman, CEO, and the president of Berkshire. And his pay is almost $413,600. Okay, he is the least paid executive in the firm itself, and he was born in 1930, and he left us like within in the past year. He left us. So sorry about that. Like he's uh still the chairman and CEO of Berkshire. And the next one is Mr. Mark David Hamburg, who is the senior vice president, CFO, and secretary, who got a pay of $3.85 million, and he was born in 1950s. And then comes Mr. Ajit Jain, who is the vice chairman of insurance operations and director, who gets around a pay of like $20.02 million. And he was born in 1952. The next executive is Mr. Gregory Edward Abel, who is the vice chairman of non-insurance operations and director, who also gets around like $20.02 million. And Mr. Ajit Jain and Mr. Gregory Edward Abel are the two most operations chairman. Okay, one is related to the insurance sector, and the other one is related to the non-insurance sectors. Okay, so they both are the vice chairmen, and they get almost equal pay for all their works. And Mr. Ajit Jain was born in 1952, and Mr. Gregory Edward Abel was born in 1962. And then comes the vice president, controller, and principal accounting officer, who is Mr. Daniel Jerome Jackshish. And we know very little about his pay or the year which was he born. So I'll move on to the next slide. So now we'll talk about the major segments of Berkshire Hathaway. The first and foremost of the segment is insurance and reinsurance. So Berkshire Hathaway owns some crucial insurance firms, which is known as Geico, which is a major auto insurer focused on price and service. And the next one is Berkshire Hathaway Primary Group, offers commercial specialty and healthcare insurance products. Then comes Berkshire Hathaway Reinsurance Group, provides reinsurance services globally, including property, liability, life, and health insurance. It also offers specialized products like retroactive reinsurance and annuities to generate long-term investment income. So this is the number one segment of Berkshire Hathaway, which includes insurance, and it's the most revenue generating segment of the entire company. And the next one is Burlington Northern Santa Fe, which is also known as BNSF. It's a major US rail network which employs around 37,000 people, which transports all the consumer goods, agricultural products, coal, and they also compete with other major rail networks known as Union Pacific, and other some freight services too. So this is the another major segment of Berkshire Hathaway. Then comes Berkshire Hathaway Energy sector, which serves around like 5.3 million customers and operates renewable energy projects globally, investing 34.1 billion to reduce emissions by 50% by 2030. So Berkshire Hathaway Energy is the another major segment of Berkshire BH, which is investing like about like 34.1 billion uh, by to reduce the emissions by 50% by around 2030. So, okay. So the next segment is manufacturing business. With 184,000 employees, its segments include industrial, building, and consumer products like Duracell, Clayton Homes, Forest River, and they focus on innovation, safety, and sustainability. So this is the another major segment of Berkshire Hathaway. Which is a manufacturing business, and actually this segment is so huge that it got a lot of firms around US and different parts of the world, in fact. So so the next division segment is the McLean distribution. This is one of the major distribution channels which is currently functioning in US, which serves for grocery stores, restaurants, beverage retailers, and they have some of the major clients of McLean distribution are Walmart and 7-Eleven. They are so popular, and these are the major clients of McLean distribution. So they focuses on high sales volume, rapid inventory turnover. These are the major focus. What they focus on. So we'll move to the next segment, that is services and retailing. This segment includes automotive, aviation, and home furnishing businesses, with notable names like NetJets, Dairy Queen, and Berkshire Hathaway Automobile, employing 26,000 people worldwide. So this is the last segment of Berkshire Hathaway. So these are the all the major segments of Berkshire Hathaway, and Mr. Buffett has a strategy of buying out various firms which he found attractive at a certain valuation. So this is how he adds more industries, I mean more businesses to his conglomerate group. So he is a very logical investor who finds the opportunity in the market, and he buys the assets in such a way that it benefits their shareholders in a very long term. So that's how Berkshire Hathaway has grown from one segment that was the insurance segment to various segments, and they have gone to manufacturing, McLean, distribution, servicing, retailing. All the segments are the results of the of a great vision of Mr. Warren Buffett. So next comes move to the next slide. So now we'll compare the segment revenue of Berkshire Hathaway. So we know that insurance is the largest segment. So all the when we compare all the 3 years, we can find that insurance is the ever well performing sector uh, in BH. Then comes manufacturing, distribution, service, and retailing. All these are growing up. So while talking about insurance sector, this segment consistently generated the highest revenue across 2022 to 2024, with steady growth reaching 90 billion in 2024. They got 90 billion revenue in 2024. Next comes the service and retailing sector, showing continuous growth of 4%, 10%, and 24%. So we can see that in the right graph, in the right chart. Um, so that is the ash color one. That is the service and retailing. So they are also growing at a very rapid way. So then we'll look onto the profit margin of these segments. From the two charts given, we know that manufacturing and insurance are the current highest profit margin segments, and the insurance never fails to disappoint the firm. Then comes the segment profit margin percentage. So here also we can see that the BH Energy here, while looking at the segment profit margin, BH Energy is one of the better performing segments in Berkshire Hathaway. So the operating income has steadily increased from 2021 to 23 with BH Energy, leading the growth momentum, followed by inconsistent contributions from manufacturing and notable improvements in insurance sector. Then comes the BH Energy segment. So the most significant profit margin increase between 2021 to 23, highlighting its strong performance. That's what I told. They have increased their performance in 2021 to 23. And then comes the segments like BNSF, service and retail, experience the smallest fluctuations in profit margin. We can see from the chart that they are experiencing small fluctuations in profit margin, indicating consistent performance over the 3 years. Almost they are consistent, but they are experiencing small fluctuations. That's all. Then we look onto the segment ROA analysis. So that is the return on assets. So while looking onto the charts, we can understand that insurance and the others are the highest return. They provide the highest return on assets. Okay. So, and when we look onto the segment wise return on assets, we know that the service and retailing sector is providing a better ROA, is providing a good ROA, and the insurance and other sectors are comparatively providing lesser one. Okay, so the manufacturing segment's strong growth. The manufacturing segment leads in asset growth 2023 and exhibits a most significant ROE increase during this period, showcasing its effective asset utilization for profitability. The manufacturing segment has leaded a lot in its asset growth. You know that the assets are growing in a very rapid way. Like when we look onto the chart when we see from 2021 to 23, the manufacturing sector was 5.29% in 2021. Then it grown to 5.68%. Then in 2023, it has rapidly rose about 12.94%. So that's how the manufacturing assets are growing for the firm. And consistent performance we can see in BNSF road, railroad and service and retailing sector also. Both segments demonstrate moderate asset growth and almost they are consistent. Increase in ROI from 2021 to 2023, we can see that it's almost consistent, highlighting their reliable contribution to overall performance. Then we can see the challenges in McLean. You know that McLean is having very lesser assets when compared to the other segments. The segment faced a slight dip in both assets in 2024 and ROA. In ROA also, like they are facing very a slight dip. So signaling potential areas for optimization or strategy focus to improve profitability. So these are the segments which BH should focus on. So now we look on to balance scorecard, which we all know. that there are certain perspectives for balanced scorecard. The first one is financial, and the measures are normally revenue growth, profit margin, or ROI. And the strategy is to optimize cost structures through efficient supply chain management. Also enhancing revenue streams by investing in high performance segments like BH Energy and insurance. We know that these segments are highly performing, so there should be certain steps to enhance the revenue in these segments. The next perspective is customer, and the measure is customer satisfaction, market share, loyalty, net promoter score, etc. The strategy would be to launch targeted marketing campaigns to reinforce brand trust, innovate product offerings based on customer preferences. That's a strategy they use to improve customer satisfaction. The next perspective is internal process. The measures are product efficiency, cycle time, quality, innovation. So the strategy is investing in advanced manufacturing technologies, expanding sustainability initiatives, focusing on reducing waste and energy use. The next perspective is learning and growth, where the measures are employee engagement and satisfaction scores, training hours per employee, retention rates of top talent, innovation index, etc. And the strategy is to provide upskilling opportunities through continuous learning programs, promote diversity and inclusion initiatives to enhance collaboration, encourage cross-functional innovation teams. So this is a strategy that they use for learning and growth. So this is all about the balance scorecard. I'll move on to the next slide. So now this Berkshire Hathaway has got a competitor, which is known as Carlyle Group. It's one of the biggest companies in its industry and a global leader in private equity. It is well established in a number of regions and sectors such as technology, healthcare, energy, aerospace, and defense. So, like Berkshire Hathaway, this firm is also into a is becoming into a conglomerate. Like they have a different segments and that they invest on, and they are generating decent amount of revenue too. Uh, Okay, so the major product lines. We can classify the segments into three segments mostly. So they are global private equity. First one is global private equity, which manages leveraged buyouts, growth capital, and investments real estate. Then infrastructure, energy, all these things. So the next comes is global credit. They focused on distressed situations, direct lending, and opportunistic credit strategies. The next one is global investment solutions. That includes like overseas private equity and real estate funds, co-investments and secondaries via alpha investors. Yeah, investing partners. So when we talk about the competition, Berkshire focus on diverse operating businesses and investments, while Carlyle specializes in private equity, credit, and investment solutions management. So that's how Carlyle Group and Berkshire is different. Berkshire focus on operating businesses and investments, while Carlyle focus on private equity, credit, and investment solutions management. All those. So when we compare Berkshire and Carlyle Group, we know that Carlyle Group is a much smaller firm when compared to Berkshire Hathaway in terms of revenue or ROE and all these metrics. When we take like Berkshire is much better. Berkshire is almost like a monopoly. I mean, it's the one of the best in its industry. They are being a conglomerate and like they have invested into various segments, but still, when we look on to the basic idea of investing, Berkshire is much away, is much ahead of Carlyle Group. So from the chart, we can see that Carlyle's ROI and profit margin have shown steady decline from 2021 to 23. The assets have been reducing from 2000. Uh, I mean, it's showing some decline. I mean, from 2021 to 23, it's showing better improvements. Well, in 2022 and 23, it's almost a similar thing. It's almost similar. There is no much increase. Okay. Then Berkshire has maintained a stable ROI. Berkshire has a stable ROI. When you look onto the asset section, you know that like the Berkshire's ROE is almost stable, and profit margin from 2021 to 23, reflecting consistent efficiency in asset utilization and effective cost management. Carlyle experienced weak revenue growth in 2022. Carlyle is experiencing a weak revenue growth in 2022. Well, uh, and followed by weaker decline in 2023. Again, the in 2023 the revenue is again declining. While Berkshire had a slight decline in 2022 with a steady increase in 2023. You can see that the revenues are rapidly rising for the Berkshire, and possibly it might be possibly due to some external factors of or market conditions probably. So this is all about Berkshire and Carlyle Group. Their operating income, I mean, in for Berkshire Hathaway in 2022, it was negative. But by the way, in 2023, it got shooted up. It got shooted up to a large extent. So that's the comparison between Berkshire and Carlyle Group. So in summary, we could tell that Berkshire Hathaway demonstrates a more stable and profitable performance compared to Carlyle Group across all the three metrics for the given years. It has a stronger ability to generate profits related to its assets and control cost, making it a more financially sound company. So Berkshire is much more a financial sound company, and Berkshire embodies stability and long-term growth through ownership, while Carlyle focuses on private equity and asset management for dynamic short-term returns. Both are leaders with contrasting philosophies and strategies. I think Berkshire is doing the best in what they can in this industry, while Carlyle needs to focus much more on the operation side, and they need to work on their revenues. So this is all about Berkshire and Carlyle Group, and I hope you liked my presentation. Okay, thank you everyone. Thank you.